All right. Good morning, everyone. Thanks so much for joining us today. Welcome to our third Bank on Washington event of 2024, Building Bridges Between Banks and Communities, the Power of the CRA. I am so excited to have Erwin, Reeves, Lynn, Willis, Jen Reed, and Thushari Gooneratne here with us today. I will introduce them in just a few minutes, but first, just a few of the logistics for today. Please make sure you're muted and go ahead and introduce yourself in the chat. We would love for folks to connect with each other, not just with us. Closed captions are enabled. You can just click on that closed caption button to turn them on. And then throughout the session today, we want to answer your questions. So feel free to put questions in the chat box. And then we will also have a Q&A time at the end. So at that point, you'll be able to raise your hand and ask questions out loud during that session, that part of the session. And today's session is being recorded. So if you have a colleague that you think would benefit from hearing all of this, it will be posted on our FEN YouTube channel in the next few days. As soon as we can get my little laptop to download and upload, it should be on the YouTube channel, and you'll get an email sent out when it's ready to go. So hello, everyone. Once again, welcome. My name is Jennifer Quiroz. I use she, her pronouns, and I'm the executive director of the Financial Empowerment Network. FEN is a nonprofit focused on the financial well-being of all Washingtonians, and we're the lead organization for Bank on Washington. It is my pleasure to have everyone here with us today. Thanks for being here. I want to take a couple of minutes to share a little bit about the Financial Empowerment Network and Bank on Washington before we get going. So as I said, we are a nonprofit focused on financial well-being of Washingtonians, and we do that through partnerships. We are a network, so we don't offer direct services, but rather we work with providers, such as all of you, to support access to affordable, effective services and resources. I like to say that we are the financial educators of the financial educators. So we do three things: financial empowerment integration, asset building coalition work, and Bank on Washington. So as part of that work, we offer free workshops throughout the year, professional development workshops for our partners. There's a list here of some of the recent workshops we have done. If you're interested, you can go to our events page at that QR code or on that link to get more information, find the recordings and links to materials. We also host the Washington Financial Coaching Network that meets the fourth Wednesday of every month. If you're interested, you can also find that information on the events page. And thank you, Ryan, who is dropping links in the chat while I'm talking. And we also offer training and technical assistance for organizations. We are so excited. Our September workshop is going to be in collaboration with HUD. So it's going to be a national workshop focused on coaching mindsets in tough money conversations. That will be Thursday, September 19th, 11 to 12:30 Pacific time. If you are interested, you can register at that link, or I see Ryan just put it in the chat as well. It'll be a great conversation. I'm really excited about that. Our website is also a resource for you. We have lots of information there, including financial information and resources and tools by topic area. We have a financial wellness provider directory and a self-service job board. In case you haven't heard, FEN is hiring. And so please go check that out. And you can find it all on our website there, fenwa.org. As I mentioned, we also, FEN is also the Washington Asset Building Coalition. We provide support to a network of ABCs across the state. What is an asset building coalition, you ask? It's a local group of providers who gather to promote financial well-being in their communities, and there are 16 of them across the state. If you are not connected with your local asset building coalition, check out the list there, and you can find more information on our website as well. Yes, and I see some of our WABC or some of our ABC friends in the room today, so welcome. All right, and the reason that we're here today is that FEN is the lead organization for Bank on Washington. Bank On is a national initiative that was developed to meet the needs of folks who are un- or underbanked and get them connected to safe, affordable, and functional accounts. So the CFE Fund developed a set of national standards certifying accounts that are low barrier. There are over 450 Bank On certified accounts offered nationwide, including 17 here in Washington State. And I will also add that Bank On Washington, our philosophy is that everyone is welcome. So whether a financial institution is offering a certified account or not, we are glad that you are here. And we know that lots of financial institutions are doing really great work in their community. So welcome. Our role at Bank On is really twofold. We work with financial institutions towards offering low barrier financial services, including Bank On accounts, but not limited to just Bank On accounts. And then we are also focused on getting community members connected to those low cost, low barrier financial products and services. We have 3 co-chairs in 2024, which we're really thankful for. Minda Michelle Maddox with the Washington State Employees Credit Union, Jarrell Jones with Credit Revolution Education Directors, and Becky House with American Financial Solutions. So today, as I said, this is our 3rd Bank On Washington session of this year. But it is not all. We are very excited that the Bank On Washington Forum for 2024 registration is now open. Leading the Way, Embracing Financial Belonging will be hosted at the beautiful Black Pearl on the Columbia in Washougal, which is just east of Vancouver, Washington, on October 24th and 25th. Registration is open. There are discounts for nonprofits. There's discounts if you are bringing a team of 5 or more. There are sponsorship opportunities if you're interested in sponsoring, and those come along with some free registrations as well. And there are scholarships. So please take a look at the website there, and we hope to see everyone there in Washougal on October 24th and 25th. There's lots of ways to stay in touch with what FEN is doing. Check us out. We have fenwa.org, bankonwashington.org. We're on Facebook, we're on LinkedIn, we're on YouTube, and you can email me directly there. And I want to be done because we have a lot to cover today. And so I want to make sure that we've got lots of time to do it. So before we jump into the session, though, I am going to launch a poll. I'm going to attempt to launch a poll because we really want to get an idea of who is in the room. Launch. There we go. We want to get an idea of who's in the room, what you do, what your background is, and what your level of comfort is with working across sectors with partners. So I know we have financial institutions in the room that might be working with nonprofit or community-based organizations. I know we have community-based organizations in the room that might be working with financial institutions. We might have some government or small business in the room as well. So if you could take a moment, please, and take the poll. I'm going to leave it open for a little bit longer. We're almost to critical mass, so I'm going to give folks a few more seconds. You have 10 seconds. I'm not a communications expert, but I know that sitting in silence is frowned upon. All right, I'm going to close the poll. And I'm going to share the results. I can't see the results. I'm seeing the results on my end. Well, I guess I am seeing the results. So it looks like we've got almost 3/4 of the folks here from community-based organizations. Welcome. And then we have a few folks from other places. We have a wide range of experience with the Community Reinvestment Act. That's great. If you don't know what the CRA is, you're in the right spot. And if you do have an understanding and you know about it, glad you're here because we're going to talk more about that as well. And wow, even spread across cross-sector partnerships. So that's interesting. So we've got some folks that don't have any strong cross-sector partnerships and others that do, and everyone in between. So that's fantastic. You are all in the right place. So thank you for being here today. I'm going to close that, get that out of the way. And with that, I'm going to turn it over to Erwin. I didn't mention this at the beginning, but all of our materials for today are on our website, including a list of all of the bios and contact information for all of our speakers. So instead of spending time today reading all of the amazing things that our speakers have done, I am just going to turn it over to Erwin, who is a community affairs specialist with the FDIC. Thank you, Erwin. Thanks for being here.
Great. Thank you, Jennifer. Welcome, everyone. And Jennifer, as soon as that first slide stops up, but you can actually go to the next slide. So I have to say this by requirement. So this presentation is my opinion, not those of the agency I work for, management. It's not endorsed by the U.S. government, and reference to any of these organizations or activities does not constitute an endorsement, recommendation, or favoring by the U.S. government. Next slide, please. So there's a lot of information, as Jennifer indicated, that's packed into this. These are the objectives that we have for this particular segment. I'm going to fly through many of these because you will have access to the actual slides and give you more of a sense of CRA, the impact that's taken place, and kind of the genesis of it. And then this is all based on legacy CRA, as it's being called now. CRA is under modernization currently, but there's an injunction out of Texas. And so there's a little bit of a holdup before the new CRA will be implemented. Next slide. So this is an example of a redlining map that was used back in the day to really kind of determine where financial institutions were, quote unquote, allowed to lend and to provide other services. And you can see most folks know this, the dark or the red areas, those were considered hazardous. They just happened to also be the same place where minorities lived. And as a result of that, there was less lending that took place in those census tracts and in those areas. And that in and of itself began the genesis of the Community Reinvestment Act and a slew of other things that took place. Jennifer, next slide. It's important to understand that CRA is not the equivalent of fair lending. And so CRA really focuses on making sure that all services and products are offered into disadvantaged areas, formerly redlined areas, and fair lending promotes equal lending and looks at making sure that there's no racial bias, that there's no bias at all based on race, gender, sexuality, those sort of things. CRA is really about just looking at names, numbers, locations, but not ethnicity, not religion. None of those things are considered under CRA as it's written. Next slide. And then these are a couple of examples of the basis for fair lending. They are melded together in a performance evaluation, but we're going to focus on CRA right now in our conversation as a mechanism that you can use to interact with, if you're a financial institution, ways that you can interact with nonprofits and government agencies. And if you're a government agency, nonprofit, ways that you can start working with financial institutions. Next slide. So civil rights happened. Again, we're going to go really fast through some of this and really highlighted what was taking place regarding discrimination and financial services. Lots of protests, lots of activities that happened. And as a result of that, in 1975, the Home Mortgage Disclosure Act really started kind of surfacing as one of those things that would help improve the opportunities for minorities, and then as a result also reduce some of the predatory and discriminatory activity that was taking place. And then Congress passed the CRA Act, the Community Reinvestment Act, in 1977. So that's the starting point for CRA. Next slide. Essentially, CRA did two things. It required financial institutions to demonstrate that their deposit facilities, and we'll also say that their lending activities as well, were used to meet the needs of the communities where they were chartered to do business. And so the footprint for that institution being the location of its offices, its headquarters, really kind of wrapped around what should be available for all individuals. And then it also encouraged financial institutions to meet the credit needs of all communities they serve. So looking at historically underserved communities, and then trying to create programs and activities that would highlight the opportunities. As we know, there's still some struggles that are taking place, but that's what the basis of the law is. And then it gives the opportunity for some other activities to come out of that. Next slide. And so with that, there have been continuous regulatory updates to CRA. And so while Congress set it up, their changes can take place amongst the regulators. And so adjustments have been made based on the needs, either through meetings, gatherings where the community has expressed a need for there to be further support for the Community Reinvestment Act and the ways that can create more transparency. And so in 1995, the banks started looking at banks' performance rather than the process. And that's really kind of one of the drivers in the overall performance of a financial institution. And then in 2005, they started looking at bank asset thresholds and established a difference between small banks, intermediate small, and then also expanded the definition of community development. Next slide. I am not going to go down these statutory amendments. If you have a need to go to sleep at night, you can pull up any one of these 200, 300, 400-page documents, and it will take care of that for you. The main thing to understand is that the additions that have taken place for the statutory requirements really are designed around increasing transparency as the financial services world continues to change and adapt. And that's really the basis of these amendments that you see taking place continuously listed here. Next slide. And then prior to kind of state that we're in now, the meat and potatoes of what has been happening with the Community Reinvestment Act was done through a series of interagency questions and answers. And this is based on information requested from the broader community to the banking regulators, as well as financial institutions, to really try and provide additional definitions on best practices, using subject matter experts to really hone in on better ways to kind of expand the impact of CRA and the performance context for financial institutions to enhance their performance with communities. This will probably be the last time I say this, but none of this information that we're looking at today really helps outline what was put forth in the proposed final rule, which is the final rule, and then more activity will come out of that once the injunction has been completed and we get guidance from the courts. Next slide. So from a regulatory standpoint, the regulators look at the bank's performance, recognizing that all banks are not the same. And they vary by size, the markets vary, the products that they offer, and their areas of specialty are different as well. And so the regulation takes that into consideration and really looks at the community the bank operates in, its competitors, and its peers when making the evaluation on its performance context. Next slide. Again, we're not going to go through each one of these. There are 5 evaluations that take place for the purposes of CRA with most nonprofit organizations and municipal service providers. It's the small bank evaluation, the intermediate small bank evaluation, and the large bank. Those are the categories in which the evaluations take place. The other 2, just for information standpoint, are specialty areas, and they only look at the community development test, and that's for wholesale and limited purpose financial institutions. These are not your everyday bank that you walk into. You probably wouldn't even know they are around because they don't market. They're not looking for the regular consumer small business loan kind of activity. And then there's a strategic plan option. So for the purpose of our conversations, we'll be focused on the top 3. And that's banks with less than $3.9 million at this particular point. These switch every year. They're adjusted annually, the intermediate small bank, and then the large bank evaluation. Next slide. And so the community development test, as you can see, for small banks, they don't have as much of a rigorous evaluation that's taking place. The intermediate, they require some of the some of the CRA testing. And just under the legacy, just for point of information, lending is a 50%, receives 50% of the points, investments receive 25%, and services receive 25%. And then you can see for the large banks, they're looking to see that there's been something innovative or complex related to each one of those three categories for the community development test, and they're rated from that standpoint in their performance evaluation. Next slide. There are 4 ratings. I'm not going to read through each of these, but the categories for CRA rating is outstanding, meaning the financial institution did an excellent job. Satisfactory for financial institutions that they're helping to meet the needs of their assessment areas. We'll talk about assessment areas in just a second. Needs to improve, as it sounds, is there needs to be more work to make sure that that financial institution is hitting some of the benchmarks related to those community credit and service needs, and then substantial noncompliance. There's more than a little work that needs to be done in that instance. Next slide. So when you step back and look at what CRA is really about, it's really encouraging financial institutions to go ahead and meet those the needs of all segments of the community. But CRA itself focuses on serving low and moderate income borrowers, geographies, households, and small businesses, including small farms. And then once you get out of heavy metropolitan, high density population areas, it starts to also take in non-metropolitan, middle income geographies, designated disaster areas. Included in that kind of non-metropolitan, it also includes rural activities as well. And then the main component of that segment of purpose, the CRA's activities still must meet consistent, safe, and sound and prudent business practices. So CRA doesn't ask the bank to step outside of good best practices for operating a business. It just really looks at trying to be more flexible within that to make sure that all of the needs are being met within the area that it serves. Next slide. So eligibility for CRA consideration, you'll hear people say from time to time, I want to see if something gets CRA credit. That's not how the regulators look at it. It's looked at from the standpoint of getting consideration, because each scenario for each financial institution, each market is very different. And so the majority of the dollars or the activities have to make sure that they're consistently meeting one of the 4 categories of community development. We'll talk about those in just a quick second. But it has to make sure that it's a bona fide activity. It can't be kind of a shell game. It really needs to impact the community positively. It must be structured so that it can achieve that express purpose. And then the activity accomplishes or reasonably is certain to try and accomplish the intent of the community development purpose. So if you're setting up an account to give access to low-income households, there needs to be that support within the bank's infrastructure so that that account is identified, that the consumers can easily identify it, and then it does have the ultimate impact, which is helping low-income households improve their financial stability from that standpoint as a result of that account. That's just one example. Next slide, please. So these are the 4 categories of community development that are laid out. And this is according to community development can be defined in a lot of different ways, but these are the categories as it relates to CRA. So affordable housing, whether it's individual or families, community services that are targeted toward low and moderate income families. Economic development focuses on the small businesses and small farms. And then there's revitalization and stabilization. Focus on the last one just for a second, because I think the others are self-explanatory. There's a commercial area that has a dilapidated building. and someone wants to come in and make improvements to that building and then allow services to be provided for the local community. That would be an example of revitalization or stabilization for something that was not economically functionable at the time. And you're trying to kind of breathe life back into that building, back into that community, and then create an opportunity for continued growth to take place around that. And usually that is associated with job creation. It could also be housing as well, but most of the time it's commercial development, trying to bring services back into a low and moderate income community. Next slide. Geographies, again, there's a little bit of density, but we'll go across the top where you can see the four categories, and these were mentioned, but this is just to a more formal definition that fits within the scope of CRA. And so it really looks at census tract, and then it would be continuous census tracts for a bank or a financial institution, and we'll talk about what that means in just a second. Then it goes across the metropolitan statistical area. This next one doesn't apply for Washington. It may apply in Eastern Washington, and I think it does a little bit in it does apply in Vancouver, where Vancouver and Portland are part of the same metropolitan statistical area. So that'd be one clear example for Washington, but there may be others along the Idaho and Washington, Oregon border, kind of in that area. And then the non-metropolitan, those are really rural areas, and they are specifically designated as well. Next slide. So financial institutions, banks in particular, related to CRA, have an assessment area. And I mentioned kind of very early on, it's where a bank's head office is, where their branches are, where they're using ATMs to take deposits, and then surrounding geographies where the bank originates or purchases a majority of its loans and activities. And so that's the bank's assessment area when a bank is evaluated for their CRA performance. They designate which areas are determined to be their assessment area, and that's what the examiners use to look at and evaluate their performance within the assessment area and outside of the assessment area as a comparison of making sure that they're meeting the needs of the communities where they have offices. Again, this is the legacy CRA when we look at that consideration. Next slide. So the delineation of the assessment areas, again, I've mentioned this a little bit, but just to kind of bring that factor in, it must include whole geography. So an entire census tract, an entire county, an entire city. And that's to help reduce discrimination, arbitrarily excluding low income communities, and can extend beyond the MSA or the state boundary, or excuse me, may not extend beyond that unless it is, a high level of activity that occurs from the bank. And then that there needs to be some justification. Things that could help or prohibit some of that activity would be a mountain range. So you've got the Cascade Mountains. It may exclude a part of the county because it's not inhabited. Those things are taken into consideration as well. Next slide. So community development and these activities, there are a lot of things that are beneficial for the community. They may not all be eligible for CRA consideration. And so we want to take in, really look at the things that have happened related to the work that's being done to determine that it is meeting the needs of low and moderate income communities, smaller businesses. So they fit within those categories very cleanly to get CRA consideration. I just want to kind of emphasize that point. Next slide. And why is CRA important to banks? So it really is a tool, and that's the way that I see it as a former banker. It was something that I was able to use with management, but really getting and assessing the opportunities for market so you can expand your market into underserved areas because sometimes there isn't as much competition. And so you're meeting the needs because others have not taken on that position. It's an opportunity to invest in communities. You're able to develop solid relationships with government and community-based organizations. That was a tool that I used to kind of help grow the institution that I worked for. And then that helped maintain and improve our reputational risk. So we had really good relationships as a community bank, and therefore business would come to us sometimes. So we didn't have to go after it as much. And so you're really able to build a stable foundation and pipeline for business. And the thing that I liked most as a CRA officer was decreased exam frequency. The better you do, the more performance you have, the better your performance context, the less frequently your exams are. So those are motivating factors. Next slide. And then the impact on the bank is that any bank that's applying has to kind of present what they're going to, not kind of, they have to present what they're going to do as it relates to meeting the needs of low and moderate income communities. So that's really, it's important for them to have good structure around that. If there's a bank applying to become a new bank, that's definitely a concern. That also happens with mergers and acquisitions as well. And the motivating factor underneath CRA, it's not a high level component, but it is a factor, is that it can result in denial or conditional approval for opening offices, relocation of offices, or acquiring another institution. And so CRA is woven in from that standpoint and really kind of serves that point to that perspective. With that, Jennifer, I'm going to pass it back to you. The next slides for questions, but I want to make sure we stay on point.
Yes, thank you. Thank you, Erwin. That was great. That was also a lot of information. And so a lot of technical information. So thank you for sharing that, because it's important to understand sort of how banks are thinking about the CRA as we are approaching them. And so with that, that is why we've put together a fantastic panel that is going to talk about what this looks like in practice. So I am going to spotlight a few other people. Today we have with us Lynn Willis with the United Way of Pierce County Center for Strong Families. We have Thushari Gooneratne with JP Morgan Chase, and we have Jen Reed with Sound Credit Union. And so we are going to walk through what some of this means, and I'm going to have each person introduce themselves. I am going to ask Jen to go first. Jen, you are with Sound Credit Union. So first of all, tell us a little bit about your role and tell us about how credit unions, what the CRA means or doesn't mean to credit unions.
Sure. Thanks for having me here today, Jennifer. So, yep, my name's Jennifer Reed, or I go by Jen, Vice President of Public Relations here at Sound. And we have 25 branches here in the Puget Sound region. We're a credit union, so very similar to a bank, but we're not for profit financial institution, which means if you are a member of our credit union, you are an owner. So funds are going back to benefit our owners through lower fees, interest rates that are competitive with other financial institutions in the region. And at the same time, we're really focused on how we can support the community as a whole. So not on a national level, we are open, our membership is open to anyone who lives or works in the state of Washington. So we, as Jennifer said, we are not a CRA focused. We are oversaw by the National Credit Union Administration. So our regulations are different than what a bank's regulations are for a CRA, but our purpose as a credit union is all about people helping people. And at Sound Credit Union, our purpose is standing with you through all waves of life. We want to understand what's going on in every individual's and businesses perspective of their life, how we can connect them with products and tools that are in their best interest, and then how we build stronger communities. So whether it's through loans or different accounts we have here at Sound, or my team going out in the community and helping with financial education and really trying to give people the tools and resources they need to build their financial confidence and understand how to manage their money, because these are life skills. And it's our job as a financial institution to really help connect people with these tools and make a difference, so they can make these decisions confidently and sleep better at night, knowing that they can pay their bills and live in an affordable manner.
Great. Thank you, Jen. Thanks for being here today. Thushari, I'm going to ask you to introduce yourself next. Tell us about your role and also other important roles at Chase that we should know about.
Yeah, thank you, Jennifer. I'm Thushari Gooneratne, and I'm the community manager for JP Morgan Chase based in Tacoma. So before I tell you about my role, I have to say, when I describe my role to community partners and the public in general, they're quite surprised because they expect large banks to typically outsource the work I'm doing. And it's truly an honor that I get to actually do this work. Sometimes I pinch myself every day because it is truly a dream job. As a community manager, I work with organizations just like FEN, just like the Coalition of Bank On, to connect the community, including individuals and small business owners, to the resources and services we offer at JP Morgan. I've been with the firm for now 13 years, and in 2020, shortly after George Floyd's murder, JP Morgan as a firm announced a $30 billion racial equity commitment. And this was not just a philanthropic effort where we were just writing checks out to the community, but a true grassroots effort where they created my role, which didn't even exist 5 years ago, as a community manager to work with nonprofits in the community, with organizations like the Tacoma Urban League, United Way, as Lynn knows, to truly partner with people on a one-on-one basis to connect them to the resources we offer. So as an individual community manager, I go out and host financial health workshops to uplift Black, Hispanic, and Latino communities and other marginalized communities, including veteran-owned businesses, underrepresented communities like women-owned businesses, and the LGBTQ plus community as well, to break the cycle of poverty and help create generational wealth. You asked about other roles that you should know related to CRA, because I am not, I should say, the CRA officer for JP Morgan in Washington. That role goes to somebody else who Jennifer works very closely and knows. So we do have a CRA officer who is based in Seattle, who serves the Washington market. And then we also have a global philanthropy partner as well. I should say both of those roles are very critical to our CRA initiatives. And as we move forward with this presentation, I'll go over what we are looking for when we're partnering with a nonprofit in the community, what pillars or what alignment we're looking for. And based on that, I can be your liaison to connect you to those partners.
Thank you, Thushari. All right, Lynn, please introduce yourself and share about your role at the United Way.
Well, good morning, everyone. My name is Lynn Willis. I'm Director of Financial Stability Initiatives. That's a really, really long term. So I provide technical training and training to 7 sites in Pierce County. There is a model that came from grassroots out of New Jersey, and so it was our CEO Donna Ponapinto was working with this project called Centers for Strong Families. She brought it from Detroit. And so she implemented this project, and it's been going since 2016. And what it encompasses, it looks at the whole person in financial coaching. So it's not just essentially financial coaching, it's employment coaching, and it's income support. So it's a model that looks at all 3 aspects of a person, because financial coaching works if people have funds. If not, it's just a dream. So you have to have money, some resource, income coming in to meet the financial goals. But we also have clients who have fixed incomes or are receiving state benefits. And if they hit a benefits cliff, they lose those. So we look at that and want to work with our clients to make sure that we're not harming them. And so we have 7 sites. We're going to build out to an 8th site in Franklin Pierce in the next few months to support families. So currently we have 1,000 clients between the 7 sites. I'll pass it back to you, Jennifer.
Hey, I'm going to kick off a couple of questions here. And Lynn, you just finished, but we'll go right back to you. How do you connect with financial institutions and, find alignment with the work that you're doing to help kind of accomplish your goals and help the financial institution?
So I work with a team of individuals on research and development. They have created partnerships with financial institutions. Because we have over 1,000 clients and our client base is different, our financial coaches and employment coaches meet with the clients one-on-one. So a lot of times they do have workshops, but mostly they're working with families who are low to moderate income, who work kind of strange hours. Sometimes they're working with the client on their lunch hour. So it's a one-on-one basis. So what we've learned to do is our financial coaches meet once a month and our employment coaches meet once a month. The financial institutions come in and do trainings with both sets of coaches. And what they do is pass that institutional knowledge to the coaches, and then they in turn support the client with that information. So that's how it works.
Wonderful. Thank you very much. Jen, from from a credit union standpoint, how do you all do your outreach in identifying nonprofits that you work with, and how can they connect with you?
Sure. So our main focus areas, obviously, as a financial institution, financial education is one of our main focuses, followed by affordable housing and food insecurity. Three main things that people are all facing and trying to bring them together. At the end, the final bucket that we have is for good for our community as a whole. So we have these four buckets that we look at when evaluating donation opportunities or supporting the community as a whole. We request that people go through our website, which I believe Jennifer has in some of the, a link for that she'll share with everybody later today. But we ask people to submit requests through our website for opportunities for us to partner together. But when we're going out in the community and doing financial education, we will bring, whether it's a program we have called the Bite of Reality, where we're going through and we bring tablets and everybody's given a persona and they have to go around in 9 different booths where we have volunteers and they're making decisions based off of what they can afford for housing, transportation, clothing, food, everything adults are making decisions on every day. We're taking this out in the community and people are really getting an understanding of, wow, it's not easy to manage a budget. How do I bring all these things together? We're also going out and doing how to read or understand a credit report and score and how to improve your credit. So we're going out and doing this, and people can submit their requests online, or they can, just email our team here at Sound Credit Union, stop into any of our locations, talk to our staff. We want to understand what's going on, how we can better serve our community. And we really believe it's important that we offer these services and financial health programs to really help people understand the importance of managing their finances.
Great. Those sound like wonderful opportunities for community engagement. Thushari, so I'm going to not change it totally, but just add this little component because you are out building relationships. What are some of the things that you use to kind of identify programs that you're going to work with, and then good ways for them to get in contact with you and also your colleagues?
Absolutely. Very similar to what Jen mentioned, Erwin. We also have some pillars that we focus on when it comes to community engagement. And if you don't mind, I'll very quickly share my screen so it'll be easier for everyone to follow along. And I actually own 2 of these pillars myself, but have access to those who own the other pillars as well. So first and foremost, the business growth and entrepreneurship is a huge piece of our initiatives in the community. I'll use actually Lynn as an example. United Way invited myself and one of my partners to present at an event for Women's History Month, where we spoke on how to think as a business owner. And those are the type of workshops that I host in the community for business growth and entrepreneurship. I host workshops on how to scale your business, how to truly think like a business owner, how to manage their daily cash flow, how to access capital, and how to do digital marketing in a modern world. So if you are an organization that supports businesses scale and grow, and especially focusing on marginalized communities, which can include the native tribes, the Black and Hispanic and Latino groups, or women-owned businesses, that is an area that, or an organization I would personally love to connect with. I'm going to skip over the next two on this slide and move straight to financial health, because that is my jam. That is what I do day in, day out. I host workshops in the community, from everything on basic budgeting skills to how to improve your credit, how to manage existing debt, how to prepare for home ownership, and even going into the investing platform for less sophisticated investors on really becoming comfortable, right, with the investing lingo. And Jennifer knows, she can speak to this, where I work from communities who are from kindergartners who are just starting out, all the way to senior citizens and beyond. So this is what I do, as I mentioned, on a day-to-day basis. So if you are working or you're a nonprofit that supports financial health in the community, we would love to connect with you. But the other three are also definitely a huge piece of our CRA and community engagement effort. So if you're in workforce development, which is the careers and skills portion, or any kind of community development, we support a lot of CDFIs, as well as sustainability in terms of being green and having an economic impact in a low carbon economy, lowering the carbon footprint. That is also an area of focus for us.
Wonderful. Thank you very much for that, Thushari. Jennifer, I am going to hand it back to you.
Yeah, thank you. I think one of the things that I've learned in working with financial institutions is that sometimes we might be talking about similar things, but we're using really different language. One example is throughout the CRA, it talks about low and moderate income individuals and families and communities. And I know in my nonprofit background, that's not typically how we talk about communities. We might put that in our grant applications, but we often are talking about marginalized communities or communities that are furthest from opportunity, or we might talk about specific communities that we're working with. And one of the things that I've learned from Erwin over the years is, yes, but if you're trying to appeal to the CRA, you want to say low and moderate income, because that's what the CRA is evaluating on. So that's a little example of how sometimes we're sort of, I think, talking past each other. So I would love for our panelists to share some examples of what is helpful when you are partnering across sectors, like what has been great, but also what are some of the challenges when you are partnering across sectors, so for nonprofits to community-based organizations. And I am going to go to Thushari first.
Thank you, Jennifer. Let me start with a challenge. Quite often in my role, when I partner with a nonprofit, the funding piece always comes up. And sometimes I don't lead with funding, because sometimes money is not always the answer. Sometimes it's the resources and the skills that we bring to the table that is needed. Having said that, we do have a lot of funding available. We're a very, very large institution. But one of the challenges I face is we are not a funder into perpetuity. We also only accept, we are an invitation-only grant maker. We also want to be more than a grant maker. We want to make systemic changes in the community, long-lasting changes, which is why we have the framework I just shared with you. Sometimes when I share that framework, it feels punitive, but it's not meant to be punitive. It's because we want to make those systemic changes and not just look at what's needed today. So I would say that has been a challenge in communicating our framework and our long-term goals. But what has been working really well is how welcoming and supportive the Tacoma Pierce County community has been for me. I will use, Lynn as a great example. I work very closely with United Way and continue to partner with them, especially with elevating business owners that they serve. The Tacoma Urban League is definitely a success story for me. We support ethnic chambers typically, and Tacoma does not have a Black or Hispanic chamber. So we are very privileged to have the Urban League supporting small business owners, Black small business owners in the community. And we do have a funding relationship with them. But beyond that, beyond helping them with operating expenses, what I love about the relationship we have is the monthly workshops that I host for the Urban League. And this are the workshops I mentioned earlier for entrepreneurs, where we talk about how they can scale their businesses, how they can manage their cash flow, how they can access capital. But the most beautiful piece of this is we offer one-on-one coaching for small business owners at no cost. And you are not required to bank with Chase. Of course, we would love for you to bank with Chase as a business owner, but you're not required to. If you were to pay out of pocket for these coaching sessions, you would be paying into the thousands, because these are business bankers who have 20 plus experience in the industry, and they will create a personalized coaching plan. This is not a mundane coaching session for a group. This is a one-on-one coaching session where a small business banker will meet with you every 2 weeks over a 4-month period to really hone in where your opportunities and needs are. So we've been doing that with the Urban League, and I would love to continue to do that with United Way as well, as we deepen the partnership with United Way. And yeah, that is an amazing success story. On a more national level, Jennifer, we also partner with Junior Achievement. And this is kind of my pet project. We also have a granting relationship with them. And Junior Achievement is at the other end of the spectrum, where we are targeting middle school students to really learn the basics of budgeting, the basics of credit, the importance of having an emergency savings account. I go in at least once a month, sometimes more, to the Junior Achievement Finance Park and mentor and coach those students, as well as to many other employees from JP Morgan.
Great. Thank you, Thushari. Jen, how about you? Some examples of what works well, some challenges, and maybe a quick success story, because it is 10:53.
Sure. So similar to Thushari is, we agree. I mean, we want to give back to the community with dollars. But we want to know that when we're giving those dollars back to organizations, that it's really making an impact. We can go to all the lunches and networking, and that's fabulous, but we would rather see the dollars going to use. And at the same time, we're limited on the funds that we have. These are our members' dollars that we're investing back into the community, and we have to be smart and make sure that we're allocating that accordingly across the entire Puget Sound region. A way we give back is by going out and helping with financial education and providing tools and resources to, whether it's our youth or similar to Thushari, we will go out and work with the elderly as well, making sure that they're aware of identity theft, how they protect themselves, how they make sure that that they know what the latest techniques that are happening and people are being taken advantage of, how we can educate them that way. But looking at our success, I would say our Bite of Reality program, we can't speak about it enough. So far this year, we've held 17 Bite of Realities and reached over 1,200 youth by taking this program where, again, they're given a persona, and which includes an occupation, a spouse with an occupation, a child, a credit score. They're determining that they are a bill, and if they pay themselves first, how that's going to benefit them and how much they would put towards that monthly savings budget each month. And then they're going around and determining, what can I afford? And sometimes these kids think that they're going to have two sports cars, and then they realize that's $2,500 a month and my income's $6,000. How am I going to do this? Not only does this help kids really understand money and the importance of budgeting, but it also opens their eyes to see that, wow, I thought I was going to be a barista when I grow up, but the amount of income I have coming in as a barista or a social influencer isn't enough to sustain a life. to keep my food on the table and a roof over my family's head. I really need to think about this. So we start working with the youth and opening their eyes to these things. They also walk away with understanding a little bit more of how difficult it might be for their parents or guardians who are paying the bills for them each month and telling them, no, you can't just have the latest iPhone, because who can afford $1,500 a month when we're on a limited budget? So we go out there and have these conversations and start to also get them to understand that it's really important to talk about finances. We don't talk about that in this country. We need to have discussions as a family. What is our goal? What are we trying to accomplish? Is it to move into a bigger home, or to save for a house, a vacation, those types of things? And just start those conversations. And we can't talk enough about the success and the impact it makes. And to us as a financial institution and a leader in the community, that's our top priority. And similar to the Thushari and JP Morgan, the goal, we hope that people come and join Sound Credit Union, but it's not a requirement. And we do this because it's for the best thing for our community.
Thank you, Jen. Lynn, I'm going to turn it over to you. We have 4 minutes left. So I want to hear a little bit about what has worked really well in connecting with financial institutions. And along with that, there is like the question of the day in the chat, which is, how do you start to find the right financial institutions and build those relationships?
Well, the thing about it is, one of our largest challenges is that Pierce County is huge. It's the third, it's a nice size county, and a lot of times there are deserts, financial institution deserts. And just trying to get the clients to understand, you can trust the banks. We want to get the clients away from using those cards that charge, you use the card, they charge you $4 to $5 per transaction. And using all these different things that take away their monies. And so we're saying, hey, these are trusted financial organizations. And so we're talking to the financial coaches and the employment coaches to help them, to say, look, a second chance banking does exist. Because, some people have made mistakes. And so their accounts have been closed, and trying to give them different avenues to look at second chance. Talk to your financial institutions, talk to the financial coaches to find out what's there. So those are the things that we have been working on, and found that clients are getting excited about second chance banking opportunities. The financial institutions coming into their communities, because some communities don't have it, and then trying to teach those who are a little afraid of using online banking how to use that asset if you don't have a banking institution close to you and you have a lot of barriers. So I give you back 2 minutes.
All right, thank you. I will also add, I think there's a few things. So number one, the Bank on Washington website, bankonwashington.org/accounts. That's a good place to find organizations, financial institutions that offer Bank on certified accounts. So that's one place to go look. I would also say check out financial institutions' websites, because often they have a link somewhere that talks about their community engagement work on their website, and it will talk about what kinds of things they prioritize. So Jen shared what is prioritized at Sound Credit Union. And if you don't offer any of those things, financial education, housing, food insecurity, if those are not the issues you're working on, then that's probably not the right financial institution for you, right? Because that's what they're focused on. So thinking about like checking out the website, looking at Bank on Washington website, and then I recommend just walking into a branch, because how you're greeted and the welcome that you get will say a lot about the values, and I want to say the vibe, because it's 2024, but the vibe of the bank when you walk in. If folks are welcoming and excited to hear about what you're doing, then that's great. And sometimes you might walk in and folks are not welcoming and excited to hear about what you're doing, and that is information for you to use as well. So, don't be afraid just to kind of walk in, look at a map and see like, where are you located and what branches are close to you? Where are folks going to go? Where are your clients going to go? Who's on a bus line? Just kind of do some of that research. And then don't be afraid to just reach out and make contact. Erwin, go ahead.
Just to add to that quickly, everybody has a bad day. So sometimes you may have to catch someone at the right time. They may be overwhelmed. But I think one thing that you want to do, especially when you're trying to start a new relationship with a financial institution that you don't have, start off by introducing yourself. You don't go in with the ask right away, but try and start building that relationship in a non-emergency fashion. If you needed it yesterday, that's not the day to start trying to build that relationship. But you want to start off slowly and show them that you're intent in helping them accomplish what they want to do in conjunction with what you're trying to do. It does sound transactional because it is to a certain degree, but step in from that standpoint and test the waters, definitely.
That's right. This is about building relationships. As with any partnership, it's really long term. It's not meant to be like, what can I get out of this partner? You got to find that alignment. You got to find aligned values. You have to understand that banks and credit unions are also businesses. And so they're going to be thinking about things slightly different. They're not, they're not social service agencies as some of us are. And so that's an important thing to keep in mind. And then those relationships require investment, really continuing to have the conversation, continuing to connect, continuing to find ways that there's alignment, not just reaching out when you have an ask. That's a big thing, but reaching out to share what's going on, reaching out to offer opportunities and different things. So, all right, we have gone 2 minutes over already. So thank you to everyone that is still here. I think that I have fixed the link issue for the survey. My apologies about that. But it is in the chat and we will send it out in our follow-up email. So if you could take a few minutes and take the survey, we greatly appreciate it. Thank you so much to Erwin, Jen, Lynn, and Thushari for being here today and sharing your experience in partnering and experience in working between financial institutions and community-based organizations. Thanks to everybody who's here today. We're so glad to see you. Please remember the Bank on Washington Forum is coming up. We'd love to see you in person. We will be having many more conversations very similar to this one at that event. And we'll get to meet in person. And so that's a big part of making those relationships is actually being in the room together. So we hope to see you there. Thank you so much and have a wonderful rest of your Tuesday.
Thanks, Jennifer.